The information in this episode is current as of the date recorded and is not intended as financial, tax, or legal advice. You should consult your tax, financial, and/or legal advisors before implementing any transactions and/or strategies concerning your finances. And with that, let's get to this week's episode.
Hey everybody, this is Dr. B with John G. Ullman and Associates. This is our weekly market update for the week of November 18th. If it's your first time, thanks for joining us. And if you're a repeat customer, don't forget you can leave comments and questions in the comments, and I'll do my best to respond to them. So as always, my purpose with this content is to use my background in economics to help you better understand the economy and the financial markets so that you can make informed financial decisions. So with that said, let's get ready to hit the books and get up to speed on the markets. So we'll start our look on last week with small businesses. So the National Federation of Independent Businesses released their Small Business Optimism Index, which fortunately showed an increase in small business optimism. Unfortunately, the index is still below the 50-year average. Small businesses are still struggling to hire workers and to deal with the inflation that we've seen over the last few years. It is certainly a positive thing to see the optimism index increase, but these surveys definitely indicate that there are some ongoing uncertainties and some ongoing concerns in the small business community. Also last week, we saw the most recent report from the Consumer Price Index. The increase in prices was equivalent to the last 3 months' increases, but on a year-over-year basis, we saw the inflation rate rise from 2.4% to 2.6%. As has been the case for most of this year, a significant portion of that increase in prices was driven by shelter and food costs, although we did see in this latest report a decline in the prices for apparel and household furnishings. We also saw the latest report from the Producer Price Index, which, similar to the CPI, increased at about the same rate it has for the last 3 months and demonstrated a year-over-year increase of about 2.4%. One of the interesting new developments in the Producer Price Index was that previously we had seen the prices for services rising and prices for goods falling slightly. And in this report, we actually saw the prices for both goods and services increase, although the services increase was still significantly larger. This new inflation data has driven economists and financial markets to reconsider what the potential Fed interest rate cutting path looks like moving forwards. The next decision will be in December, but the market has already started to contemplate and in many cases pull back from expectations of big Fed rate cuts, either in December or throughout the year of 2025. All three of the major stock indexes were lower last week, with the NASDAQ and the S&P 500 taking the greatest losses. A lot of the enthusiasm post-election seems to be fading, and some of the larger Trump trades seem to be unwinding. There also continue to be concern in the fixed income 10-year Treasury market, as we saw Treasury rates rise as high as 4.5%, and then hover around that level for Thursday and Friday. Ongoing concerns about inflation, trade, and potential Trump policies seem to dominate the landscape this week in both the equities and the fixed income markets. Along those lines, we saw some interesting developments in other markets this week. First of all, being Bitcoin. We saw the value of Bitcoin increase more than 10% in 1 week post-election. We also saw the price of Bitcoin increase for the first time above 90,000. Analysts continue to consider and debate the potential value and rise in the Bitcoin market over the coming months. We also saw the price of gold fall by a significant amount, in fact, erasing most of the gains in the gold market since September. Last of all, we saw the value of the dollar rise at a significant pace, in part related to conversations about inflation the resurgence of the global economy, and the potential for trade tensions, conflicts, and higher interest rates than it had previously been expected. Coming up this week, we'll see the third quarter report released by NVIDIA. We know that this report is the final of the Mag 7 earnings reports for the third quarter. We also know that last quarter, NVIDIA's report beat expectations, but it also resulted in a fall or a decrease in the value of NVIDIA shares. Not only was NVIDIA affected, but at that time, we saw a significant downturn in several of the big tech companies. So for these reasons, the investment market will most definitely be watching NVIDIA's report, as well as the market's reaction to the results of that report. At this point, we've seen over 91% of the S&P 500 release their third quarter earnings reports, with 75% of those exceeding their expected earnings per share reporting, and 60% of those exceeding their anticipated revenues reporting. Based on the reports we've seen, the year-over-year earnings growth for the S&P 500 in Q3 of 2024 is approximately 5.3%. This increase in earnings growth has actually been the fifth quarter in a row that we've observed market-wide positive increases in earnings growth. Despite significant earnings growth, we've also observed significant share price growth, especially since the election. And these two changes have continued to exacerbate what were already historically high valuations. The current forward 12-month PE ratio sits at about 22, which is significantly higher than the 5 and 10-year average, and is very close to the historical height reached in March of 2000 of a value of 24. As share prices continue to exceed the growth in actual earnings, this valuation creates some concern among investors and those that feel that the market may be steadily overpricing and overly optimistic about future potential revenues and earnings. The drop in the market last week most likely helped to ease some of this tension, but as we prepare to head into the big holiday retail season, most investors and analysts will be continuing to watch these valuations and these PE ratios closely. As we wrap up our watch list for this week, we expect housing to be a large part of the conversation, as we'll see updated information from the National Housing Market Index, building permits, housing starts, mortgage applications, and existing home sales. As housing continues to be one of the biggest ongoing problems in our current economic situation, and one of the most impactful aspects of most households' finances, we'll continue to watch the data and monitor both how housing construction and housing prices are changing and evolving today and in the future. Speaking of the future, both housing and manufacturing continue to be ongoing weak points within the economy and will continue to be an ongoing focus for our market updates and reports. Hopefully, as we progress out of 2024 and into 2025, we'll see both positive signs and ongoing development and optimism in both of these areas. We'll also continue to watch as the Trump administration and Trump policies continue to unfold. We'll do our best to bring updated information and discussions of the implications of these new policies as they become available. As always, we'll continue to watch the inflation and unemployment struggle as the Federal Reserve makes decisions about interest rates and the future trajectory of monetary policy. And as we head into the holiday season, we will most likely see discussions of consumer spending, retail sales, inventories, and trade start to take center stage, especially in light of the increasing potential for new tariffs in 2025 and beyond. As always, we'll be watching the economic reports and the market activities to bring you the most up-to-date information and help you stay up to speed on the markets. Make sure to join us again next week and like and subscribe this channel if you found the information helpful. And as always, you can leave questions and thoughts in the comments, and I'll do my best to answer them for you. If you've made it this far in this weekly update and you have a minute to spare, don't forget to check out all the other content we have here on our channel, as well as our website. With that, have a great week, and we'll see you in next week's update.